None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. We are live, and it is Monday morning. How did that happen? Wow. I have no idea how that happened. Life's going way too fast sometimes, I think. Not a lot going on. The unfortunate part is we have more of the same. Matter of fact, in the commentary, I didn't know what else to say, but we're back to where we started. And it seems like it just resets every couple of weeks from where we were. We'll try to make some things interesting. We'll go through some stocks. I noticed that there was a couple emails for team members to watch a support email. That's if you do have a question, try to support email, because I saw one come in last week and we didn't answer it. And I think we had time. We were kind of just bumbling around trying to kill some time at the end. And anyway, so yeah. It's interesting doing a show like this and being live. It's you know, I watch TV a lot different than I used to. I can tell you that. It just there's a lot of things that you need to be on top of. As far as the markets go this week, I think it's going to be really boring. Wednesday afternoon FOMC meetings. Yippee! I don't think there's much going to come out of that. There could be some little tidbit of information that, because the market's starving for some type of news, maybe it grab onto something there. But I expect another yawn on Wednesday. There's not really anything going on. I think there's a couple little earnings going out. The deals out there, you got DirecTV going on and AT&T, and then you got our friends at the Pfizer still trying to raise bids, and they're getting rejected. They're feeling very their self-esteem is not doing real good right now. And anyway, so not a lot going on as far as all that stuff goes. Because I don't know, I haven't looked at what is it, something AstraZeneca or something? Isn't that
AstraZeneca?
Yeah, whatever. Well, maybe we'll take a look. I don't know how that stock's doing. Maybe you can take
Not very good right now.
Oh, really? Yeah.
It's one of the stocks we'll be covering today.
Yeah, good. And then as far as some of the other stuff goes, you know, there's zero. I mean, zero. I watched European TV last night. They're making up stuff to talk about. There's just nothing going on at all, anywhere, anyhow. And you know, I think that I guess that's just where we are in the markets right now. And we'll go through this, but just kind of a review of things is you're going to get from. I have one of my computers timing out on me that I was about to go to, so we'll try that again. But yeah, as far as anything goes, it's just boring. So at least the weather's staying under control out here. We're staying under 100. I think we got to 102, so that's about it. So weather's done. We got talk, and we're really struggling this morning to find things to talk about. But the realities is that the market is consolidating. We'll talk about it as we go through some of the technicals, but the sideways movement is probably, there's two ways to look at it. there was a guy that used to do a TV show many years ago. He used to always talk about the markets pausing to refresh. So even the market's pausing to refresh, or it's pausing to decline. I don't know which. The old classic story, is it consolidation or, is it distribution? And, it's hard to tell right now. And, everybody's scrambling. They're looking at treasuries. They're trying to figure that out. We're going to go through all that here shortly. But there's just a really hard trying to find any real market sentiment right now that you can hang your hat on. And, I think Friday's close was most disappointing. I guess from my viewpoint, I have, some evil bias. I'd like to see the market go down for a while, and we'll take profits on whatever we got left and just, let the markets decline and reset. I would like to see a reset in this market, a lot more than 10. I think the Russell's already done the 10, but I think, a 20-25% reset would be really nice. Little consolidation, set up some nice patterns, and then we could maybe go back, retest the highs, and stair step the equity a little higher. So with that, let's go. I'm going to go over ahead and take Mitch off screen so he can scratch his nose or whatever he needs to do. I'm scratching my head while I'm on, but anyway, we'll take a look at some of these. We'll go through the S&P as we usually do, and just talk about some of the patterns, non-existing patterns, although there's a couple things that are popping off the screen as we talk. We've managed to get up 6. I haven't looked at the screen here for a little bit, and I am not seeing anything changing, so that's always a good sign. This should fix it, I hope. But yeah, I'm not. There we go. Now we're back up and running. All these little things that make all of this network talk to each other makes life interesting sometimes. So yeah, you can see my screen popping up. I'm getting a pretty big delay on a lot of stuff right now, even off of my my actual producer here. The best way to look at this chart here, we are, I don't know, 1 session, 2 sessions from an all-time new high again. Because of the rebound in the last hour of the trade on Friday, we saw a 7-point gain. Now we're working on just about another 7. So all of a sudden, and if you go off the lows, we're 20 points off the lows all of a sudden, just like that. And actually nothing's happened, which is what these trading ranges look like. On this graph that I have here, there's a couple of things I want to show you that I've got coded, which is a nice feature of this software. This is my yeah, I got all kinds of stuff going on here. Everything wants to delay here this morning, but these two, you'll see red bars throughout these patterns. I'm just highlighting a few of them. And when the market is in red bars, what it's doing, it's actually showing you that, and I set it up so whenever the market is below the 10-period moving average, that it turns to red. Well, we're back to green this morning, so the little rebound that we made, we rallied right back. Where the arrows are on the page, the 40-period moving average arrow, this is a daily S&P cash chart, and we went right down just a little bit below the 40. We've rebounded back up, and now we're back above all 3 averages again, and we've got a green bar, which means we're above the 10. So one of the things that we're not seeing is any acceleration of momentum, but we are seeing pattern changes. And as I discussed before, this pattern that we keep seeing is this ABCX, ABC, or it's a double 3, triple 3. Who knows how many 3s we're going to get? But this is the way that this sideways, elongated sideways corrective pattern lasts. Because of the nature of these charts and on this daily graph, there's still a bias to the upside. I mentioned this in commentary last night, that the longer term charts still have a bias to the upside. the short intermediate charts, which we'll go through in a minute, the objectives have been moderated a bit, but the longer term objectives still remain intact. And the infamous number is 1795. That's really where we've got to get below to start to negate and actually signal any kind of lower prices. Until then, it's going to be more of the same. Possibly we'll see maybe this pattern where we get back above 1900. I guess we'll call 1900 the big resistance number, but every number has been that way. 1700, 18, now 19. We've seen the markets act the same way, and it's a matter of trying to find out, you know, what's driving the markets from this standpoint. Let's really, it's kind of interesting here. I've actually got a using my screen that I'm watching here is live, and I've got a delay, so it makes it really awkward to present this. I'm not sure why. It's like everything is delayed. Anyway, so I guess that's the way it's going to be today. Yeah, so let's go over and look at the weekly graph. Yeah, nothing wants to change here. It's really interesting. So let's try to trick everything. There it goes. Tricked it. Weekly graph. And I'll go to a different view of this in a few minutes. But this particular graph, we've got the 10, 21, 40 period moving averages. I only have PPM 1 on here, but we're seeing some acceleration. It's actually it's at 0.23. In fact, let me just go over to the other index here. I want to use a different page. I think this will give me a better perspective of what's going on and help me to present this. So a couple things that are happening from a trend standpoint, intermediate trend standpoint, is we now have the index here at, just draw a couple arrows here. We've got PPM 1 at 0.23. PPM 2 is only 0.11, which is below a trend. But we have PPM 3, which was on the 40-day moving average. It was in the 26th percentile range last week. It's now 31. It's accelerating, which is the longer term / 200-day 40-week moving average kind of indicator. So we're seeing the underlying trend beginning to expand a little bit again, and there's not anything more than that going on, but the trend continues to elongate. It continues to stay alive, and we're seeing some accelerations, at least for the moment. And this is calculating real time off of the last trade that's out there. So this isn't end of day, it's actually real time as far as the calculations go. And they'll change a little bit, not much on a weekly, but if you have a shorter term chart, the indicators will actually change as the market trades or the price changes. And in this case, we're still seeing, and this is what I was talking about earlier. Let me bring up a screen that you'll be able to see here. And I keep forgetting to change that yellow on that. Matter of fact, I'm so tired of it. I'm going to do my best to change the colors on this thing. Right now I'm going to make it green. It's going to be easier to see the value. So right now the target ranges, I've talked about this before, they are, the intermediate target is for a move to 1973, and then the extremes now are 2034 and 2072. And that's, I didn't mention in commentary this week, but those are still valid. And that's somewhere between a 4 to an extreme of 8 to 10% on the upside from here. It's certainly possible if we break out of this pattern that we see this thing reaccelerate. We'll maybe look at this a little bit. Matter of fact, we will. We'll go through some of the dashboard stuff. But the BPM database is really pretty solid. It's at 47%. There were a few it was kind of a mixed buy and sell picture. Wasn't anything really stand out there. There's a couple things that is going on that we'll talk about a little bit with the database from a sector standpoint, but from a pure viewpoint of what's going on in the markets, it's stable, and as long as it stays over 42, that tells us we've still got an uptrend. It's not a robust uptrend, and it's all about, and maybe that's what 2014 is going to be about. It's about stock selection, and if you're doing indexing, that's fine. You're going to get what you get. You're sideways, but if you're able to pick some good stocks and screening, that's probably what it's about. And I think tomorrow's version or session for Process Warriors, we're going to be addressing some of those things. And it's always been about good stock selection. If you're trying to do something beyond a typical allocation, whether it's dynamic, tactical, whatever you want to call it, you're going to always be acting somewhat like the markets, even under or overperforming, depending on how you're positioned at any given time. So not a lot of excitement in indexing. Where I guess where the big bucks come in is doing individual stocks. That's where it's at, and that's why we spend a fair amount of time every year, every conference, Process Warriors, talking about individual stocks. We are going to go through some constructing of ETF and mutual fund strategies, but they're pretty basic, and it's it's one of those things where allocation is what it is. It's supposed to mitigate risk. It's supposed to tag along when the markets go, but it's never supposed to beat anything. Maybe I don't even think in the long run I've seen any good allocation strategies do all that much better than the underlying market. They pretty much mimic each other. But from the standpoint of what's going on with this trend, I just don't. It's actually getting a little better with this market action we're seeing today. So we're up 653 at what is that? 1884. Haven't talked about this number. Remember 1882.60? Well, we're back above it again. I don't know, maybe 10 hours ago or less, we were at 1861. So, like I said, we get down to the range, we get back in the range, we're back at the top end of the range, and it's always looks like it's going to go through when it's at the top, and it doesn't, and then on the downside it looks like it's going to go down, and it doesn't. So that's the way that goes from the way the market's trading anyway. But so those are the objectives: 1973 men, and the extremes are 2034 and 2072. And for the markets to get to that level, we're probably looking at, at least third quarter, maybe even fourth quarter, if they were to get to that 2032. So maybe dog days unfold, and then maybe there's a fall rally or something, maybe in October. But for right now, it's a flip of a coin market. But when you start looking at probabilities based upon the trends and all that, there is still some bias to the upside. Let's look at the last but not least, the monthly graph, which is the super slow-mo chart that is actually going on from there. Yeah, just a minute here, folks. I've got to adjust something. I'm having some weird thing go on. Just give me 1 second here. Stupid dog. Hello. You there? Okay. All right, folks. Sorry about that. I've got it all fixed up here. Yeah. So in a monthly graph, it's what I call the super slow-mo, and it is actually not really accelerating or decelerating. It's staying the same. So just real quick, if I bring up the whiteboard here for a second, you will see that all of these indicators, ppm 1, 2, and 3, are just flat. But they're flat from a formation standpoint, but we're looking at well over 1% gains on this as it goes, as it's unfolding. So the result of that is the same thing that we talked about last week, and it's just there. It is what it is, and that's how that looks like that's going to go. So let's look at some more fun stuff, and let's go to looking at treasuries. I think that'll be a good place for us to go. And I need to go to a completely different screen here, or do I?
And Bob, you had made some comments in the commentary about treasuries and, the fact that, at least initially in our commentary, the outlook, I guess I should say, for the year, that we were expecting the treasury rates to increase. I know one advisor also asked a question about the rates being exceptionally low. That's
not true. That's not what I said. I said the first 2 quarters, lower rates, not higher.
I'm sorry, you're right.
And then sometime, and I've still been following that same thing, so probably need to reread that, both of you. Anyway, but yeah, no, the first 2 quarters I was expecting lower rates down into 250, 255, which where we went right now, and then higher rates later in the pattern. That's still the pattern. It's really strange. I think what happened was I need to open I didn't save something here, so this will make things a bit interesting. So I need to open up a different deal here. But yeah, so the as soon as this comes up, this will put us where we need to be. There we go. Yeah, from a standpoint of what the rates are doing, let's bring up the 10-year. Yeah, but it was expected to do just that. It was supposed to be down for the first couple quarters, and then it was going to be higher. So I brought up the 10-year weekly here. Things are kind of bouncing all around on the screen. I've never seen this delay before, which is really interesting. But the pattern is kind of rounded over as it's unfolding, and I was looking at this last night, and the reason why there's some pretty good downside pressures. So one thing about looking at a market 5-6 months ago and making, looking at the patterns, and then you have to actually respond to them. But the pattern that was there 4 or 5 months ago is that this thing was topping out from a yield standpoint, and that it would decline. And I think the range was like, I'd have to bring up the report, but I think it was 260 to 250 range. We went to 247.3 on, I think it was Thursday of last week. So that's the lowest level we've been for a while. It snapped back since then. We're at 252 right now, and my expectation is that we'll probably stabilize around this level. However, having said that, let me bring up the whiteboard, and let's talk about the same trend issues that we have talked about every time, is looking at what the PPMs are doing, and they are in, all 3 of them are in downtrends. PPM 1 minus 0.47, minus 0.85, and minus 0.28. All 3 of the averages suggest that this thing still has some downward pressure, and some stabilization will flatten out that downward pressure, but there's some pretty good overhead resistance for yields to go much higher than where they are. Maybe 260, something like that would be about all you would expect on the upside, and that would be a 10-point range. The realities are that rates right now are going to have little impact, and so the great debate out there right now is, are treasuries reading into something? Is there some deflationary force, even though PPI and CPI would say no? Most of this stuff is coming out of Europe, this attitude, and you have to remember that the treasury market is the great parking lot for lots of capital around the planet. So it's just not cash flows here in the United States. It's just not cash flows that are going on within market participants here in the States. There is a lot of folks that we utilize the Treasury market to place other types of bets, or at least for a safe haven. So, you hear that all the time, but it's true. And from an international viewpoint, there's a lot of flows that have to be considered. So, Europe is probably the biggest problem out there yet. It continues to be an issue, and there's all kinds of talk of deflation. See, they're the opposite of the U.S. They had the great inflation in 1921 in Germany, which basically was a precursor to World War II and Hitler's uprise because of the pricing and things that went on there. And if you look at what happens from Germany or Europe, they concern themselves more with inflation, so they're always trying to do things to combat some sort of inflation, where we're actually trying to create inflation because we had the Great Depression and the big deflation. So it's there's the two battles across the seas that always dominate central bankers' attitudes. It's like somehow they're in the moment, but they're always thinking about the bad moment of time that was on the planet. So we've still not got beyond 1921 and 1929. Those were unique periods in history, and certainly in the financial history of the planet. So all those cash flows continue to be really significant from the standpoint of what's going to happen in treasuries, because of the way the world has been connected, and the ability at literally a push of a mouse to be able to do some things and be able to make bets across the planet, especially on an institutional level. So from the Treasury standpoint here then, let's go and let me just take this down, and let's look at some real short-term stuff. Let's take a look at the daily, and you'll see basically what I'm talking about here. You still have negative 0.35 over here on the PPM1, negative 3.6 and 2.2. So you have even a downtrend on this as well. And I took the video off, my video off of there, just so I can bring up a couple screens, because it always I seem to be in the way when I'm on the screen there. But the most recent action here is that you've got you got 2.57 is the 10-period moving average, 2.62 is the medium, and 2.65. So as I mentioned earlier, just off the cuff, that 258 to 262 range is a wall right now, and it's not likely to be penetrated. So that's 10 basis points from where we currently are right now. So we're just a touch under 252 now at 251.8. So that is going to keep the market down, and it's interesting because there's a bit of an acceleration to the downside happening after the last 3 or 4 sessions that we had. So one last look, and this is where the higher rate view comes from, and it's been moderated just like the S&P I mentioned. Matter of fact, they didn't show that, but probably maybe it bounced back if necessary. But this same phenomena happens from time to time, and on the chart that I have up there right now, you'll see that there was a higher objective here. Let me bring up this grid here so we can see this better. The higher objective was for it going to the 384 to 468. Most likely that is what I had in the annual report, because that was active at the time. You can see these values up here, and the result of all that is that we now see a new objective set up. Now it's 314 to 334, so it's moderated substantially. and this happened on the S&P, and whenever that happens, then the expectations have been lowered from a pattern standpoint, not from a fundamental standpoint, but maybe so from a fundamental standpoint, that you have this type of action unfolding.
Hey Bob, you originally were sort of projecting that we'd hit those higher rates back in Q4 and Q1 of next year. Do you think that with these newer rates that we're still looking at the same time frame, or what are your thoughts on that based upon what you're seeing on this?
No, actually that's good. I'm glad you brought that up. But yeah, it's still the same expectation that sometime this thing, if it does turn around, it's going to take 6 months plus. And you have to remember that the QE program is still on. While they're scaling out, they're still buying bonds. And like I said, these international flows are going to affect what's actually going on there. So let's say the fear of deflation goes away in Europe. Well, guess what? Maybe people start pulling some of the money out of the treasuries. That flow stops. The bid goes away, and all of a sudden you've got higher yields and other things going on. And like I've said before, I don't think until everybody knows the last high was 303 on the yield. So that's probably the high water mark anyway. As we approach that level, should that occur, then that's going to maybe get some folks nervous about what's going on in the market. So yeah, if that's the case, and maybe higher yields ultimately equal lower stock markets, and all that comes into play in the third, fourth quarter, maybe even into Q1 or 2 of next year. That's the tough part to find to time at this point. And in fact, it really isn't that important to have that view, because we're going to be able to make lots of incremental changes within portfolios and other strategies that are going to do that. Like right now, we have pretty heavy bid in the bonds, right. and that's going to stay like that until it's the old VIX Brandio. Now it's going to keep expecting more of the same until it shows you something different. Right now, all these trends on these yields and what have you are pretty our expectations, at least from a technical standpoint, are still down. So those are things that are happening from that standpoint. Guess we haven't looked at this, but we could. I can go over here and we can put on. Let's take a look at the Dow index. This is long-term monthly. I'm going to go over to the intermediate first. And same old, as we talked about last week on this chart. As soon as everything stabilizes, I sure hope my voice is synced up right with what I'm doing, because I'm seeing really strange delays. So Mitch, I don't know if you can kind of check that out. It's making me nervous. I've never seen this type of delay on a show before. Anyway, the pattern that's unfolding on this chart on the Dow is not too much different than the interest rates, and it appears that interest rate differentials are probably still driving the currencies. I guess we've seen some softening. This is the basket of currencies, so if you start to look at some individual currencies like the euro, things of that sort, maybe we can do that real quick here. That might be an interesting thing to look at. Here's the euro on a weekly graph, and you can see we're seeing some downside. They've been doing everything. Mario Draghi, the central head of the central bank, the ECB in Europe, is continuing to talk down the currency. He's done a pretty good job. He hasn't really done a lot physically in the financial markets to do that other than threaten, and sometimes the posturing by central bankers can have quite a bit of effect of affecting market sentiment, at least getting traders and the cash flows to think a little bit differently on a short term. So probably about 80% of everything central banks, at least in the old days, used to do was just posturing and saying, hey, you guys better watch it or we're going to do this, and the market tends to adjust itself to some of that verbiage, and it's I'm not sure. The credibility, I think, is back with all the central banks. They've certainly done what they said they were going to do, and to the point of going nuclear in some places. But looking at this right here, at the euro, you're right down on the 40-week moving average, or the 200-day moving average, if you will, and we're a pretty critical level. We actually have a negative PPMs on flat on PPM 2. PPM 1 is minus 0.3, not really a downtrend, but the 40 period moving average that we're at is basically flat as a 0.06. So that's not really a trend. So there's not a lot of support at the current levels, but there is support there. The other currency that's done I've talked about, I guess I got to keep beating on this one, is eventually I'm looking at the Japanese yen to be a pretty good play here, and we talked about it before. I think we put up, it's the FXY, which is a ETF for that, is a pretty good place for you to participate in this trade. VPM is long it. You can go into VPM 2.0 or Expert and bring that up, and you'll be able to see that. So the yen is still a play, and then let's take a look. Actually, one of the bigger movers on the currency market has been the UK, and it's interesting because I don't know that this has ever happened before from the standpoint of as central bankers go. Typically, the central bankers, forgetting the ECB anyway, has really been, it's usually a national. So like you have a British national that is running the central bank. They have a Canadian running it. And matter of fact, it's an Morgan or J. Help me out here. Who's our friends? Our big guys. Forget, it wasn't J.P. Morgan, but Goldman. He's a Goldman guy, and so now you got Goldman running the central bank, the Bank of England, and I thought that was interesting when they recruited outside of the borders. That's how bad things got. There weren't any smart British guys, I guess, at the time that they trusted. So they went and found this Canadian guy who actually was, I believe he was chairman of the Canadian Central Bank as well at some point in time. I'm not positive about that. But I thought it was kind of an interesting choice. But since he's come in, you can look at the currency here. You've seen a pretty good appreciation in the British pound. And a lot of these currencies have been flowing. So when you start to look at individual currencies, there's a lot more activity in some of these individual currencies than the weighted indexes. Once again, it's like the S&P versus an individual stock. So there's been some really good opportunities in some of these currencies if you look at them as a whole. If you go to the Dow index, it's a flat line because you've got all these different influences. There's a basket, and it's also a weighted basket, and I think it's weighted toward with the euro, but it's just still there's a lot of used to be the German mark used to be the big weighting, and now I believe it's the euro. But even then, with everything else, you've diluted it. Classic indexing issue is where you've diluted it to the point where it's not doing anything. So I've been having a lot of fun talking about this. I'm going to get over and we'll start going to our stock of the day here. Let me just I'm going to get over to a different screen because I don't think I'm on a screen I want to be at. Oh, one thing I didn't do. Let's do this real quick, and then we'll go to stock of the day. This is our futures markets. So, Mitch, did you confirm that my voice is in sync with?
You are all set. No need to worry.
Well, it doesn't feel good. I've never seen. I mean, my screens are still refreshing from things I did 30 seconds ago on my desktop. So it's kind of interesting. I've never seen that delay. So I'm glad that it's working like it's supposed to. So I just needed to check so I wasn't, looks like I'm talking in some other language because it's not synced. Anyway, these cycles continue to go. We just had a high cycle come in on the 5-minute chart on the futures, and that this is back to the S&P here for a minute. And then the hourly graph, interesting enough, had its little typical cycle come in here, and we're pretty close to probably topping out on current on the S&P. We're now up 414 on the session, so we're starting to see some softness here. So let me get to the right chart. We'll do some stock of the day stuff here. Just want to make sure I don't want to use that one. So we're going to go ahead and use this page, I think, is what we're going to use. So Mitch, fire away. Let's see what we got going here.
Well, let's since you already mentioned it, let's go ahead and revisit AZN for AstraZeneca. Or Zeneca. Now I'm butchering the name. AZN.
Yep, AZN. There we go.
So, as everybody's familiar with by now that's been watching this, Pfizer announced a hostile bid on it, and it popped the price nicely on it. And ever since the initial announcement, the price has slowly been backing away. And today we're down pretty big on it, as I recall.
Yeah, about 11% looks like right now.
Yeah. So this is, at least in my book, and I'd be more than happy to disagree with you, Bob, if that be the case. But this is a great example of when a company announces a takeover or a buyout, where take the gains and run, because there's so much danger in either the trade is going sideways until the buyout's completed, or of the trade falling apart, which it appears may be the case with this.
Well,
time will tell.
Let me play the other side.
All right.
Now we sound like CNBC. This is interesting. But the other side of that is that they raised their bid.
They did.
And if that bid, if they fight and it goes through a hostile takeover, you'll be sorry you sold it, because it's going to be a much bigger bid than what it was the other day. I think it puts it at 65 or something ridiculous. Or I forget, not 65, I forget the number. VPM on the screen right now is projecting the price go to 93 to 106. It doesn't know about all the stuff we're talking about. So there's some new objectives that popped up after the move, so I don't know that that's where it's going to go. I don't know how much does Pfizer want this company? I don't know, and do they care? And in the end, shareholders only care about one thing: is money.
Right.
They really don't care about what drugs they're making and all that. They just care about the money. So we'll see how this one plays out.
That'll be interesting.
But I don't have a problem. We talked about this stock a couple weeks ago. It was trading at deal price. If you had taken it off, it would have been, so far, it would have been the right thing. So we'll say Mitch is winning. But I was actually with him when we talked about that, and I still don't have a problem with that.
Instant, right?
Yeah, I don't have a problem with it. It's just that I think that sometimes you let it play out. Sometimes if you don't want to be that aggressive, you can take half of it off. You can do things to lower risk, and that's, in my opinion, not really overriding what the system's telling you to do. It's really about managing individual risk. And when you're doing individual stocks, it's a much different scenario than we have before. So, but that's a fun stock, and we'll continue to keep it on the radar screen so we can see how this ultimate plays out. But they did raise their bid, even though it got rejected. They get to do that. In the end, I think the CEO or the chairman said from these guys from AstraZeneca said that let the shareholders vote me out, and they just might do that.
We'll see.
So we'll have to see how that plays out. So what's our next stock?
Well, let's key in a little bit on AT&T and DirecTV. So AT&T, of course, ticker is T, and that was the other big announcement of a takeover today. Was AT&T agreeing to buy out DirecTV?
Yeah. So
that would be a pretty big expansion when it comes to that company's capabilities and size as well.
Yeah, I have mixed feelings about that. I love my DirecTV, and AT&T. I guess they do okay. I have them on my server, but
well, you're a customer of both right now, right?
I am. So I really I guess it's all good. So what just came up here is the weekly graph, and what's interesting, in spite of 2%, 1.93 decline right now. Let me just bring up this sheet here, and we can see exactly. There's some price objectives up here. So the high target is 38 to 41 on this stock, currently trading 27. So VPM likes it, at least from the pattern standpoint. It looks like this stock is going to do good. I guess it's really about some of the things going on in the cable industry and the consolidation of Time Warner and all those folks, all these battles of people trying to. Big is good in America, right? That's what it's all about. How can I be bigger than the other guy? Or everything's bigger. So much for too big to fail. Maybe that's what America is becoming. There'll be just one company eventually. They'll just do everything.
Isn't that the plot of WALL-E or something like that?
Yeah, I think it is.
That.
Yeah,
it's big and large, or
yeah.
I forget what it's.
And that, I mean, I joked back in the '80s when there was a merger mania going on. I said it was mainly in the brokerage business that there would be two firms left, and one of them would be trying to buy the other one. That didn't really happen. But if you look at the landscape, I've been doing this for 35 years. I could sit here for the next 10 minutes and name names of major broker dealers that don't exist anymore. So the landscape is always changing. And back in the days, for those older folks, when E.F. Hutton was around, and I mean, they owned the place for a while. I mean, they had the best ads, they had the best everything, and I had some buddies that were real cocky that worked there. I never went there. So I was at Shearson and Merrill, and those are my wirehouse days. But anyway, this stock looks like it's going to go pretty good. I guess you want to bring up DirecTV next, right?
Yep, and right now you're looking at the 1.2 system, correct?
Probably so.
All right, so right now the optimized is on 3.2. That one we are currently flat.
Oh, okay. That's a shame. I think
we sold up higher than all this.
Oh, did we? Okay. Well,
Currently, that's worth noting.
We can take a quick look at that. It's pretty. Okay. I don't have it on here, so we'll just go on for right now.
All right, sounds good. The next one, DirecTV, is DTV, and if I read it correctly, I believe the buyout price that they've announced is $95. So we're a ways from trading in that right now, if I got my facts right.
We are, and we're trading $84.97. So that's interesting. On speaking of buyout deals, when you have a big discount like this, I definitely would not, if I own this, sell this because there's a deal.
I agree.
And the reason for it is the ARBs are watching this thing, and this deal has some uncertainty because there's going to be other elements that come into this deal, such as competition elements and monopolies and all the stuff that the DOJ could even get involved at some stage. I've seen these deals happen, and with the other situations that are going on, maybe that's the case. And I guess with the big government hanging around, it'd be easier for them to take over 2 big networks instead of having to deal with 4 different people if they were going to. If George Orwell shows up at any time soon and takes over. But the bottom line is this stock has traded pretty well. It's also off about the same as AT&T. But looking at, this is actually sort of interesting because before this deal, let me bring this up real quick. Before this deal happened, there was some price objectives for this market to go to 85 to 93 was the target, and this goes back to in April these targets were generated, and we're 85. So we're coming into that pattern range of where I guess somehow the pattern knew that $95 was the right price, I guess, Mitch. So we're trading into that 85 to 95 range, which was the projection from the actual pattern. And for whatever reason, that the market's moved up in that deal. I guess another vote for the technicians figuring things out ahead of time. Somehow the prices are going there. So I'm not too hardcore of a technician. I don't think fundamentals sometimes don't lead, but a lot of times you can figure out a lot of things from these technicals. And even looking at VPM, because it's a technical quantitative strategy, you're going to see BPM buy something, and you look at the trade profile, and it's projecting prices into a range. And it's if you look at those, it's amazing how often we go into those ranges. I've always wanted to try to find a way to take advantage of that statistic from a modeling standpoint and make that happen. So let's do come back live so people could they can see me again. I'm back. I don't have a screen with Mitch on there, but anyway, what do we got next here?
Let's do FFIV. That's for F5 network. That's another pretty commonly held position across the board. And right now we just got a sell signal this week.
Yeah.
On the 1.2 system.
Yeah, you'll see when it comes up, it's actually showing that sell already executed on the open, because this thing actually operates on a real-time basis. So it's already seen the open, knows to sell it out. It's at least it's there now. You'll see a sell order. So so this is a widely held stock in VPM. I wonder if this comes from a screen. Is this in any of our screens by chance that we?
I'll have to double check. I don't know offhand,
yeah.
But I do recall back in the day when I used to run a couple different stock portfolios. This was one of them. So
yeah.
This is one I'm familiar with, especially in that trade back in I believe 2010, 2011, where that nice 300% run up we got.
Oh
back
yeah, no, that was nice. Huh?
It was.
Those are always fun to get, and that's actually one of the things about doing individual stocks. You're never going to have SPY go up 350%. Maybe I'll back off and say never is a bad word. I always watch out for that word. But the reality is it's not likely that you're going to get that kind of gain. Typically, 30 or 40%, we're all whoopee, it's a big deal. Another advantage of having that and looking at trade impact. So before the show runs out, I do want to go over to maybe go over to VPM for a couple of seconds, and more importantly, go over to the dashboard and just take a quick look. I want to keep getting this in front of folks. If you haven't been using this, this is a good place to look at what the rotation of the stocks are and going on by sector. And we didn't see a lot. It was interesting. Chemicals, I believe, last week got hammered. There was quite a few sells that came into chemicals. This week we see a little rebound back in, and then you can see the breakdown by sector here. I'm kind of scrolling through slowly, and you see some selling incremental, but this is how stocks work inside of each sector, inside of each group that you're monitoring. You're going to see little increments of change, both positive and negative. That's the nature of the beast, is that it's always going to be flowing around from that level. Take a real quick look at the mutual fund rotation, which I haven't kind of doing this on the fly with you folks. Looks like alternative, just really stable. These have been the same. I don't think they've changed a lot, and they shouldn't be, because when you're indexing, utilizing even ETFs or mutual funds, you're going to see mostly stability, especially in a trending environment that we talked about earlier. This is how this thing should look. Down below we can see the target dates and different elements. It looks like we're seeing market neutral funds coming in here on the alternative phase, some selling here on foreign small growth. So this whole I guess small cap phenomena looks like it may be global, and that there's a lot of folks taking some profits on there, trying to get into the I guess there's some fear there with the small caps, and it's interesting because a lot of things that I've talked about over the years with building good quality stock portfolios is really in that small mid cap area. That's where you're going to get the best bang for your dollar. I would say you want to find the $1 billion company that can become a $3 billion company, and that's how you make a lot of money. It's hard to find a $30 billion company that can become a $90 billion company and get those same type of returns. So these I think $1 billion has always been my cutoff. Those are the kind of stocks that can actually give some pretty good opportunity from the standpoint of lots of growth. And like I said earlier about the folks with the Pfizer and the what's the name of the company, Mitch? I'm going to butcher it.
I'm going to butcher it now too. AZN, we'll just call it.
Okay, AZN. The whole thing that's going there. At the end of the day, only thing all of us care about is a profit and the stock going up. And I guess some folks actually like stocks. A buddy of mine told me, you date your stocks, you marry your strategies, you'll do a lot better in the long run. There's a different commitment level in dating. You can go, you know what, this isn't working out. I don't think we're going to go out again. Where if you're married, you got to go down and get an attorney, and there's a little more, I guess, to get through all of that stuff. But the investment exposure from the funds is really stable, and these values really haven't switched around a lot and seen any real significant rotation that I've noticed. Have you noticed anything at all, Mitch?
Yeah. No, you pretty much hit on all the main items with this. We had just a slight bit of net selling this week, and it was in that foreign small mid space.
Right. Okay. Yeah, and that probably makes sense compared, I guess, based on what's going on with everything that's out there, I guess, happening, which is, as we talked about earlier, is not really anything, right?
Right.
So.
Watching paint dry right now.
Yeah, that's pretty much it. So let's see here. We've got about 4 or 5 minutes to go.
Maybe. Do you want to touch upon the selling of the sectors within VPM?
Oh yeah, good call. Good call. I'm glad. See, that's why you're here.
I'm just the voice in the background right now.
Yeah. So we're going to bring up 2.0 here real quick, and what Mitch is talking about. We're going to go to the research. I'm going to clean out some of this, see if I can get the best possible view on the screen. But one of the things that continues to happen is we're seeing the number of sectors that are being held continue to contract. So while this site, it goes to what I was saying earlier. You're looking at individual stocks versus an index, or whether it's currencies, individual currencies versus a basket of currencies. Whenever you do a basket or an index or a portfolio, it moderates everything. So that's why in the VPM concept, when you're building portfolios, you want to have concentration of assets with sell disciplines. That's going to be able to make a lot more money than trying to diversify everything. Old buddy of mine used to always say, diversification, fastest way to moderate losses and moderate gains that he knows. And if you want to make any money, don't do that. So that's, I guess, some of my the mentors that I had in my past were driving that. But what we're seeing here is we have two more capital goods and transportations. And capital goods was something we held for not quite a year, about 10 months. And on transportation, it's a much, actually it was a loss on that from an index standpoint, where it just has faded over. But we had about a 9-month holding on the capital goods anyway, and not a lot on this other index. So it's basically rolled over and failed. But what we're seeing now, while we continue to hold this 47 percentile range as far as the bullish percent, we're now down to 25% on the sectors. So there's actually 3 of the 12 sectors that we track. We use a Thomson Reuters breakdown. And on the groups, there's 102. We're only down to 38. We're 37% on the actual group. So what's happening, some of the individual stocks within those groups are still hanging in, but when you start looking at the sector group rotation, it's getting weaker. And maybe this is, in the end, is the thing that will really maybe drive the direction of this market or set the top of this market whenever that comes. We'll have to see. So we got about 2 minutes. I'm going to bring Mitch and I back on screen here together, a new background. But I think in closing here, while there's not a lot going on from an index standpoint, there still are things going on in the background, and I think that's why it's important to have rotation, to have different types of strategies. We usually suggest that you have at least an equity strategy of some sort that for the appropriate clients you can blend into their mix, and you have index. If you're doing bonds, 60-40, you just have to watch, because ultimately the goal of the individual stock portfolio is to bring the alpha back in, and too many people try to bring alpha back in by doing some alternative strategy, which usually more times than not destroys what they're trying to do than actually achieves what they're trying to do. And it's a lot easier to do with mixing some individual equities, and they're not that hard. Mitch and I are working on a couple projects that are going to maybe bring those in from that standpoint. So Mitch, you have any closing comments?
No, we'd just like to get some more feedback from advisors as far as what they'd like to see see us cover in Market Thunder. It's pretty funny that the only consistent feedback I've seen was to change my sweater, which I successfully did today.
Well, I'm glad that the peer pressure worked, because I've been telling you for a long time. So anyway, but yeah, so no, that's good. Tomorrow, Process Warriors, 3 o'clock Eastern time, will be on board to start talking about some of the. I think we're still trying to complete the screen and build and maintenance mode, right? I think we got to the maintenance and ran out of time. So
correct. Yep. So that's what we starting from tomorrow.
I would put that as a pretty significant watch, and whether it's live streaming or you just stream it after the fact, either one is the way to go. So with that, I think we'll say goodbye, and we appreciate everybody showing up and taking the time out. We actually have some pretty consistent folks showing up, some of the same, which is good. You know, I appreciate it. All right, folks, have a great day. We'll see you tomorrow at 3 p.m.